Hello everyone, welcome back to another Lumley trading live stream. Today, obviously, we're going to be watching the markets as normal. Quite a few big events happened overnight, so we will run through all of those. And I think the biggest one is going to be the buyout from ticker BIIB. So Biogen is buying out this stock on the top left, ticker RETA. And that's RETA Pharmaceuticals. So again, yesterday we were trading at $108 at the close. They're buying them out for $172.50 per share. So a massive increase from where we currently are. You can see top left pre-market, we're trading at around 164.75. So definitely a strong move on this buyout news. Again, I think this is basically confirmed. So it could be a potential bit of arbitrage trading by trying to get in now and waiting for that buyout would be 7.5 points. But again, then you always take on that small risk in that if it comes out that they're not going to buy them, then obviously that stock will fall and it will fall hard. But that was basically the same opportunity that Twitter had. That one was definitely a lot more risky though, because it was Elon Musk and he was trying to pull out of that deal. So there was a lot more risk on that sort of one. But I wanted to cover that first. Then we also have a few things on news-wise. So we have, firstly, today we do have the Bank of Japan. I think we're still waiting actually on the numbers though. So the rates came in as expected. I think we're still waiting for some sort of speech from the Bank of Japan though. That should be key for the yen. I guess we can quickly see how the yen has been moving. I don't imagine the whole conference is done then, because it's pretty much faded that whole move. But again, it was quite volatile, so that might be it. I'll have to look more into that. So we have that. Then also wanted to cover, so we firstly had the Canadian GDP come out. That came in line at 0.3%. That was forecasted and actual. Then we had the core PCE Price Index release. Again, that came out in line at 0.2%. That was both forecast and actual. Then we had employment cost index. Now this was forecasted at 1.1%, actually came in at 1%, so a bit lower than expected. This is normally good from a stock and bond perspective, and bond perspective, usually weaker for the dollar because it is less likely that we're going to need hikes. But again, it's not a massive news event, so it probably won't move the market massively. But we are moving up. Obviously, we are going to be gapping up today, and that's going to be off this PCE news mainly. And we are coming into the anchored VWAP, so we can see if we can squeeze on this open, because there will be most likely a lot of stops actually sitting around there. So we'll see how that moves. And then we do have some news as well coming out at 10 a.m. That's going to be the revised UOM consumer sentiment. That's normally a fade trade, normally something I look to trade over on the futures. But again, we can definitely trade that on the stock side. Normally, we just be a 1 minute fade, meaning if it pushes up, we short it. If it pushes down, we buy it. Is normally what I'm looking at on that kind of opportunity. We can quickly run through a few stocks. Well, market's actually open in 5 seconds, so we'll wait for that. So we can see how these all move on the open. There we go. Everything's open. So again, we got the big gap on RETA up 50%. Again, that's the one with the buyout at $172.50 per share. Big gap up on PG, up just under 2%. That's off relatively strong earnings. AMC with a slight gap up of 3%, but still basically pushing back to those lows off that news. Again, we did talk about this when the news happened. A lot of people were bullish off that news, and I continuously said it wasn't exactly good news because it came out, the courts denied them to basically dilute your shareholders' shares. But if the company itself is trying to dilute your shares, it's never going to be a good thing for the shareholder. They're trying to weaken your position in the company. So that's why we're still sending off AMC, and we will probably continue to push lower. Probably $4 will probably be seen next week. Also seeing BIIB, which is Biogen. That's a company actually buying out RETA. They're actually down 1% and a bit. You tend to actually see this quite often on the buyouts, normally more just because, again, you're overpaying, usually paying a bit over market price. Obviously, market price was $108 a share, and they're paying $172.50. So always going to be great for the company being bought out, not so for the company buying. But again, that's normally a longer term play. It's more just short term fear is normally what causes that sell off. So that's going to be as well the leading gap today. We do also have a BJDX. That's up 50%. Let me just grab up key levels, see if we're near anything. Closest key level we have on that is at 1072, so quite far off. BD up 28%, not near any key levels, not focused on that. We then have FIXX. We do actually have a key level basically where we are now at 122, but I don't like the move of this stock. You can see from how we gapped, it's basically just been flat. I'm never a fan of when you see something like that. And then we'll also just cover SIGO, because I remember seeing this name quite often. And yeah, we can see after the close yesterday, had a massive move to the upside. We actually hit an old key level, but we can clear all those because they're from last year. We did come into a key level though, that's at 692. That's our 6-month second deviation. But from there, we don't actually have a key level for a while. After that, our next key level is 811. Again, those levels are from here, so you can see we're not just making them up out of nothing. That's our second deviation on that 6-month. So that's those levels. Now, there was a few things as well I wanted just to cover. So firstly, obviously, you probably heard last night about Trump coming into or getting more charges or more potential charges. But Trump did announce this morning, Trump says he will not stop presidential campaign if sentenced. And that comes from the John Fredericks show interview. We also have McConnell plans to serve through current Congress in his leadership position. You also have a price hike from JP Morgan for Intel. New price target at $35 from $30. That's going to be the key stuff. We'll run through actually some news in a sec. We can go through the upgrades and downgrades and all of that. We're just seeing Biogen is said to weigh takeover of $4 billion drug maker RETA. Okay, yeah, that was before. And then obviously now they've gone through and said they'll pay, they'll acquire them for that $172.50 a share. You're also seeing Intel shares up 5.4% after forecast Q3 profit above estimates. So again, that's going to be that key mover on Intel today, is they have revised and pushed up their Q3 profit. Again, it's always forecast. That's always going to be the strongest mover on the stocks, is the forecast, because it's all about that future earnings. We are starting to pull back though on it, and if we do pull back, I am looking actually at support around 35.30. Could be a nice potential long, because it is a bullish. Not only is it bullish news, they had relatively good earnings. They've boosted future estimates. And again, they have just had price hikes, and JP Morgan is normally the name I like to look at when they're doing their price hikes. They tend to just hold a lot more weight than a lot of the other names. So if we do pull back to this area, I probably will look for a intraday long, but we'll see if we can come back that whole way. But it's already given back about 2% of its gains, so we'll see. Again, obviously, the SPY did gap up today on the open. We are seeing a bit of hesitation on this open. Again, that's because we got the anchored VWAP. Actually, basically, on the ES, we are basically hitting it, and that's what we're selling off on. And you can see on the SPY, because they do trade a slight difference, because obviously SPY doesn't have much volume after hours or pre-market compared to the futures, which are fine at all times. But on the SPY, we actually opened above the anchored VWAP. So really we need to see what's going to have more strength. Is it the SPY or the ES? Again, they will move in the same way, but I mean, if we're able to hold this support, showing the strength there, and again, if we sell off, then we're paying more attention to the ES chart. So that's how I'd be looking at it. Does look kind of weak on the open though. The first 5-minute candle closed, and that did close red, and looks like we're trying to push those lows as of right now. So paying attention to that. Again, we're not actually too volatile as well on that RETA stock. Again, this is the one being bought out. This is mainly just because, again, the reason you don't tend to push up exactly to that price of 172.50 is, again, there's still that chance the deal doesn't go through. And so basically that's the level of risk. And if you were looking to get in, you know, you're risking about $50 to make 7.5. So unless you maybe have options to define it, can be a bit more risky. Starting to see a bit more buying pressure come into Intel, even though the S&P is selling it off. So it looks like we're holding that anchored VWAP from the S&P futures very nicely. Just having a quick look through to see if there's anything key. Oh, also, I don't think it's on the economic calendars because it was done a bit more late. But Biden is now set to deliver a speech on the economic policy at 1:15 p.m. Again, that's going to be the clock on the top left, bottom left. So Eastern Standard Time, 1:15 Eastern Standard Time today. So that could be quite key. Also, you might actually see moving GameStop. I haven't actually checked the stock today. No, we're not moving massively off the news, but GameStop did have news that their CFO, I believe, is resigning on August 11th. The company says it will be appointing Daniel Moore as its principal accounting officer and interim principal financial officer. Also actually seeing some bad news out on AMC as well. AMC illegally shared customers' information with Facebook lawsuit claims. So we'll see what's happening with that. And also would have been after the stream yesterday, you also see a few of the crypto funds cutting down their size. So you had, I think it's pronounced Secure, but they cut their crypto fund from 585 million down to 200 million yesterday. So might be seeing a bit of weakness in crypto after that. Doesn't seem actually Bitcoin and all that is all too affected from it though. Did just have an alert go off from PG. We are still moving up off their good earnings. We do actually have a level then at 156 and 12 cents. So we can put that on. This is a first deviation though. So if I do swing it, would be small size, but definitely something to be paying attention to. Roku is also a nice mover. We are up 14 or just under 15% on the day. Now what I like with this especially is, again, we did cover this when we had the big earnings coming out. We cover these before the earnings drop. We usually release a video around 12 p.m. Eastern time, and what you can see, we provided this level in advance before the earnings released. And again, that is what we were looking at as a key resistance. We sold off onto this. So if we're not trading the initial earnings release, it's then waiting for that retest and a break. So that's what you expect. We can see we are now breaking this. So now the key resistance goes to 79.50. So that would be my focus on Roku. And again, that would take us above that 6-month high, not quite that 1-year high as of yet. However, and I can actually show you what it looks like when we've been trading at these levels before. So with Roku, every time we've touched the second deviation, reaction down, and it's really been good at catching these tops. So again, we are moving a bit more of a catalyst because it is earnings now. So you do take on that extra risk, but considering how good it's been at these key levels before, it is definitely something I am interested in swing trading short. I will probably leave it to Monday though, because I don't like trading the day it's just had its earnings unless it really starts to fly and we can get quite a good or relatively cheap entry. Also have Dish up 8%. Don't think they've released earnings, so I need to see if there's any news on it. Okay, so the news on it, I think, seems to be... No, that's old news. That's Dish officially plans to sell wireless services on Amazon, but I don't know why then they're moving so much today. We did cover this stock somewhat recently, though. I think it was actually like 2-3 days ago. Again, key levels on this. We're not quite there yet, but we are coming quite close to this $18.08 or $8.08. That would be our first line of resistance. We did hit that on that previous move. Actually, that was probably the 26th. Yeah, when we had that big move before. So really, I'd be waiting more for a break of that and potentially 970 as a potential short bias level. So that's quite key on there. Just seeing Palantir up 5%. I saw they did get some price target increases today. Yeah, you're seeing Wedbush initiate coverage on the stock. So that means when they first release a price target or an opinion on the stock. So Wedbush did that. And I thought I also saw someone increase their price target, but I can't see it anymore. But either way, that's always quite a good thing. And they did come out at a $25 price target, so obviously above current price. And they stated it as an outperformer. So a relatively good catalyst. Again, we're up 5 to 6% right now. This stock as well, before, again, if you go back a month or two, you know I was quite more bearish on this stock, and the reason for that is as we were coming into these areas, we were coming into overbought areas, but as we've been holding this elevated price so well, the deviations have reset, and now we're basically near again at basically fair value. So for the time being, I'm not too bearish on the stock. I could see it moving higher. I wouldn't really be flipping bearish until probably $22, because that would be that second deviation on the 6 month and third deviation on the 1 year. So as of right now, can definitely see some potential upside on Palantir. You also have Neo up 5% today. Looks like on the open it's trying to come back, retest its anchored re-up, then continue. I am looking at trading this stock, but I am looking for a move to around 14.50, and that's going to be a swing short is what I'm looking at. Yesterday we got close in the pre-market, we went to 14.17, but yeah, didn't quite hit that 14.50, and plus I would need the market to be open because I would probably be managing the trade with options. You also have Kavana up 8% today, up at 43.60. Nice test as well on that anchored re-up on the open. You're starting to actually see as well now the SPY hold its anchored re-up, starting to push up. It's just broken as well the intraday high, or the high of today. Also actually have quite a lot of stocks up around 5% on the frequent movers list. So Tilray you have kind of continuing its options move. So yesterday I think it was when they released their options, or the day before after hours. Seems like we're holding and continuing that move. We do have a deviation at 223. Kind of held it yesterday and then sold off below it, and now retesting. So much more expected, more expecting a break. Going over to Fubo, up 5%, but still kind of pulled off from its deviational levels. Mullen, as always, down again today, basically down at 52-week lows at 12 cents. Also, I'm seeing some news on XPEV today, so that's also up 8%. JP Morgan, I definitely know, released a new price target on this. Key level on this XPEV is $21.76. So let me update that, or we'll do 75. So that's where the key level is on XPEV today. Seems like we're already breaking it and holding it. If we go higher, again, we don't really have any targets. But considering the news coming out, they have had a partnership with Volkswagen. I would be a bit more cautious on trying to trade the short bias. So unless we kind of push up to $25, $30, I'm not going to be looking really to trade this. Seeing a Roku alert go off as well, so that probably means Roku's coming into that key level. Yep, coming in again. That key level is at, might have moved very slightly, but near enough the same. So that's actually not at 79.50 anymore. That's at 79.78. So we need to see a bit of a push more to the upside, about another 20 or 30 cents on there. But that would be a key level. Again, I wouldn't short the initial move because this is off earnings catalyst. So I'd wait for there to be a bit more reasonable kind of trading. Oh, it looks like we've already spiked straight through that 50, broke it up to 79.73. We'll probably get that next pop now. Yeah, there we go. So again, I wouldn't be shorting the strength, so-called. We can see the volume starting to decline. And I would start waiting until we start seeing some actual pullbacks before looking at these short bias, because especially a stock like Roku, it just takes this momentum and it will just fly until really it feels like stopping. Key levels aren't really going to do much. But that's just what I've noticed from Roku. But yeah, definitely I'm liking the look of a potential swing short now on it. So I'll see if we can open that maybe a bit later. Also, Ford we have down just under 4%. Again, they did have their earnings. We actually spiked up off the earnings release and then sold off after the conference, as you can kind of see here. Earnings numbers, we spiked up. Conference started, we sell off. So just wanted to note that. Not near really any key levels on the Ford. So not paying too much attention to that. OSTK still selling off. We kind of got the nice top on that yesterday. That could potentially be the overall top. We came back into the third, retested, sold off, and now we cracked down to that next third deviation. So again, these are normally the short bias trades we look for, really high probability trades. We're testing the high from the gap, which was at 33.50 roughly. So we could see some buying pressure come into that, and I'll show you what I mean by that level. This level here, buyers were most likely sitting there to people, and if you were short, taking profits. But if we retest this, that's when you could start seeing that snap down and that potential for that gap fill coming down into around $31. Okay, I think we covered everything key now. We have been talking now for about 30 or 30 minutes. So I guess we'll play the news again. If you guys want any stocks analyzed, let me know and we can run through them. Otherwise, we'll just let a bit of CNBC play out for a bit, and we'll get some of the news up as well so you can actually see that as it's coming out. So I'll put them again. I'll just usually cover this far right chart because we don't need to see two of the same.
On other strategic investments you could be doing. You miss out on certain hires because you're just in limbo with regard to what your future looks like. You miss out on certain strategy decisions. You can't make as many decisions in terms of supply chain changes or R&D. So, that's kind of why you see such a freeze on the market, is because people don't want to.
Also, just wanted to note Turkey's foreign minister Fidan. We are in cooperation with Hungary on Sweden's NATO membership bid. Also, WTI crude falls 1%, trading near $79.
Very similar percentage increase yesterday at this time, only it obviously retreated as the day went on.
Yeah.
But Apple, Meta, Alphabet, Amazon, Microsoft, all up more than 1.5%.
No direct correlation, but enough of one, I suppose, that across the entire curve, yields are negative today, so that's not upsetting that story. Again, we're looking ahead to next week, to David's point, with mega cap and Apple and Amazon, which are going to be the last of the two of the mega cap tech stocks to report. The only one that really didn't do much this week, I don't know what it's up for the week or down, is Microsoft, but otherwise it's been pretty good across the board in all of those names.
Yeah, no, that's a great point here. And just kind of looking at the Treasury complex as well, because we were kind of anticipating or looking into some moves on that front with the Biogen news and what it meant for some repatriation of cash, potentially selling some of, U.S. government debt in favor of kind of the...
You mentioned the Treasury complex. That actually heads us to the bond report, Leslie. Well done. Good segue.
That's why they pay me the big bucks for my Birkin bags.
Oh, yeah, those Birkin bags, which we know now go up to $300,000 each. All right, let's take a look at how treasuries are faring this morning. You can see that 2-year at 4.893, 10-year 3.979% is what you get if you lend your money for 10 years to the U.S. government. We're back at this.
universal.
Show you what the markets are doing. Dow and S&P on track for their third week in a row of gains. It's been in many respects a slow grind higher. Dow, as we said, up every day this week before yesterday, and it's still only up 2/3 of 1%, 0.67% on the Dow, which is good for 173. A reminder later, don't miss Wharton Professor Jeremy Siegel. He'll be with me on Closing Bell today at 3 o'clock Eastern Time. Get his take on what's going on with the Fed and where he thinks the market can go in the weeks ahead.
Alright, sorry, I'm back. Actually going to do something real quick. Not all that often. I will trade the odd one. I don't tend to trade the actual momentum all that much anymore. I guess I still kind of trade them as I did before with the SDC standard deviation channels, where if they start to pop, they're super extended. I'll still trade against them, but small caps I don't trade, or momentum I will. It's more the small caps, because a lot of times they don't have the options or they don't have the shares to be able to short. So I just found that a bit more hassle. Whereas when you get the bigger names, the Cavanas, the Overstock like we got on the chart now, even the AMCs, if they pop, I will still trade them. I just don't trade the momentum up. I'll trade the momentum against it, knowing that it will most likely fade, and it was an overreaction.
Com.
Billion-dollar plus deals in private equity have been scarce recently. According to S&P, 33 deals of that size have been announced so far this year, down from 96% last year. Deal value is down 62% year over year in the second quarter. And with the dearth of deals, fundraising has also slowed dramatically. It's down 20% to the lowest level in 8 years. But I recently sat down with KKR's global head of private equity, Pete Stavros, for our Delivering Alpha newsletter, which you can subscribe to using that QR code on your screen there. And he said now is, quote, a great time to do deals.
The data has shown over decades now, we got a lot of data on private equity outcomes, when the public markets are more volatile and when credit markets are...
Also, just to note, again, we got the Michigan numbers coming out at 10 a.m. currently estimated or seen at 72.6. Just to confirm, again, that's a revised UOM consumer sentiment coming out in 3.5 minutes at 10 o'clock. Forecasted 72.6%, or 72.6, no percent, sorry.
Private markets relative to the public ones, David.
Yeah, an important point he makes there, of course, again, that you can do your best deals in an environment like this, but you need prices to come down, and that adjustment period takes some period of time. Sellers, they can be kind of stuck. They look at the peer group, and especially when you got a rally like you do in the NASDAQ right now in particular,
yeah,
it can make it hard for those comparisons, so it's a standoff.
It's the epitome of financial psychology right here, because people say, well, I was able to make 5x last year, or 2 years ago most likely. Now I'm only down to 3 or 4. Do I want to sell, or do I want to just hang tight until things...
Big sell-off coming on PG. Looks like we could just be putting back with the overall market, diverging from the kind of options, the earning strength it has. AMC basically giving up all its gains. Again, no surprise there. We'll probably see that push down to $4 probably by the end of next week.
There's a feeling that things were too expensive. So, I do continue to hear we're going to see a lot more activity in PE. That may just be a hope instead of a reality. We'll see.
We heard about this a little bit on the Goldman call. I think was that last week? I'm getting my weeks confused. Where they do expect that to pick back up because PE deals are a big driver of their investment banking business as well.
Stocks
Leslie?
have done well.
Yes.
Over a month.
Yes.
KKR up 8, Blackstone 14%, TPG 8.
And they're
Stocks are
beneficiaries of those capital rules as well, because the business moves to the non-bank financials.
Yep, private markets. Scott, Leslie, thank you so much for helping me through this hour.
Thank you.
In particular,
Yeah.
just being here in general, being you.
Thank you, David.
Again, this is kind of why we said we don't short at those levels, especially on a stock like Roku. As we come the first time into the levels, we want the weakness to show before we short, because in a case like this, it just flew straight through. And if we didn't have defined risk, could have been in bad trouble, depending where your stop was. So, seems like we could do that. Our next key level on Roku is at $85.35. So if we can continue up, I'll be paying attention to that then as that next kind of key level. Coming into there, I mean, that would be a massive move. It would be getting extended on the day. That one I would feel a lot more comfortable actually just shorting. But again, obviously, we'll see how it is when it actually comes into that level.
Think about this crazy life. I've been working day and night. If I had money, you're my type. Still taste you like I'm sipping my tie. I don't talk too much, but I got a lot to say.
Again, we got about 20 seconds now then till the release of the consumer sentiment. So we'll get ready for all of this. Got the numbers, should all be ready. Okay, we've got about 8 seconds. Again, mainly watching the SPA. Throw this onto a 1 minute to make everything clearer. There you go, 10 AM. The numbers should be out, just waiting to get them. Not a massive move by any means. Again, sometimes there's a reaction, sometimes there isn't. Doesn't seem like you'll really even get the fade. I haven't got the numbers as of just yet. There we go, 71.6, who came in at 1 under estimates. Now, as it came in under, that's normally a bit weaker for the currency, so weaker for the dollar. Usually strength in the bonds and the indices. Again, less likely for a hike, but again, the main focus on numbers like this is always going to be down to the CPI. I mean, that's always going to be the main driver. These can just give you a bit of insight into how these numbers are going to come out. But considering we've now seen the core PCE come in line, the employment cost index come below expectations, and now the consumer sentiment come down below estimates, could be a good sign coming into the CPI release that it could now, well, come down lower. Again, all this is going to be priced into the forecast, so the forecast should potentially come out in line. But the lower that number goes, the better it is. But again, we can kind of see, at least on the SPY, we did kind of get that fade opportunity. Only moved about 30 cents on it. We can quickly see what happened to the ES. See, on the ES works a lot better. You get about 3.5 point move, so a few ticks, or quite a lot of ticks. So yeah, about what's that, 12, 13 ticks. So an alright move from the futures side. Again, that's why I trade it on the futures. I don't like trading that move on the SPY.
Long morning so far, as you see, up 1.5%. The broader market also putting up gains of 0.8%.
But we can't talk about the Dow and the winning streak.
No, it's over.
Because that's over.
That's over.
And
1897
I thought
holds.
I thought of you when we went negative and we were not able to have that new winning streak, because I thought how happy you would be.
I was. You know how you react to the Magnificent Seven? I react that way to the
Exactly.
Dow.
That's why I felt.
I just
you, yeah.
can't stand it. I don't know why.
Well, now we don't have to talk about it anymore. All right. 30 minutes into the trading session here, the three big movers are watching for you. Intel headed higher, beating on the top and the bottom lines, returning to profitability after.
This consumer sentiment as well might take us over 1% on the day. We'll see that on the SPY first, and then lagging a tiny bit behind will be the futures. But we should see both up a percent because that number numbers did come out quite strong.
So far today. And finally, Newell Brands, one of the top gainers on the S&P, beating on the top and the bottom lines despite lower sales in the quarter and cracks in the armor when it comes to the consumer. That stock's up almost 6% here.
All right, consumer sentiment is out. It was just moments ago. In fact, Rick Santelli has that for us. Rick.
Today, these are the July finals, which means the mid-month reads get tossed. Well, the mid-month read for headline University of Michigan sentiment was 72.6, but it gets downgraded to 71.6. What does that do? Well, that takes our comp from September to October of 21, so still a very solid number. On current conditions, same dynamic. 76.6 gets replaced, 77.5 gets replaced with a slightly lower 76.6. That's the best level since October of 21. Expectations, 69.4 gets downgraded to 68.3, but still the best read since July of 2021. Now let's get to the more important numbers to many. One-year inflation outlook moves from 3.4 to 3.4. It remains the same. Now, that's interesting because that is a bit of an uptick from the final read in June, which was 3.3. Many continue to point towards that. And if we look at 5 to 10-year inflation, a bit of a different scenario. The mid-month read was 3.1%. It now becomes 3.0%. And we've had a lot of 3.0s. There hasn't been much movement in the 5 to 10. All the actions in that one-year inflation outlook. We see yields are mostly lower, but mostly lower doesn't translate week over week. At 489, we're down 4 on a 2-year on the day, but we're up 5 on the week. On a 10 at 397, we're down 3 on the day, but up 13 on the week, which means that we've seen a de-inversion of the tune of about 8 basis points and that 2s to 10 spread. David and the gang, back to you.
Okay, Rick, thank you. Rick Santelli. You know, speaking of sort of the fixed income markets, so the Japanese has long battled.
Also, just to note, because I don't think they covered it, University of Michigan conditions final actually came in at 76.6. The forecast, I think, was 77.5.
And you mentioned that today's snapshot of the markets looks pretty similar to what we saw yesterday, but then things change, and things really changed on that headline from Nikkei at about 1 o'clock in the afternoon yesterday, saying that the BOJ would consider abandoning yield curve control or backing away from it. Overnight, we had the BOJ meeting, happened up at 10 o'clock Eastern time overnight, and we got that headline that, in fact, they...
Also, you're seeing some news out of Russia. You have explosion reported at oil refinery in Russia's Samara, and that's coming out by the local parliamentary deputy.
Above 4%. That's what caused stocks to go lower yesterday. So we haven't seen that sort of follow through above 4%, but that's definitely something we're watching. We see the market reaction. Immediately here, though, we are seeing equity reaction a little bit to these consumer sentiment numbers, which is sort of interesting because we usually don't see much.
And we continue to have many of the big cap tech names power higher, as they were doing it this time yesterday, in part on the strength of Meta's better than expected quarter. Again, many of the stocks were treated during the course of the session, as you just described, Melissa, but Meta shares up another 2.7%. And across the board, I mean, it's Alphabet, it's Amazon, Apple, Microsoft, NVIDIA.
It's amazing how it's just back to the old playbook.
Quick thing on Southwest Airlines, so ticker LUV. Strange, I'm just saying they got quite a lot of downgrades today. You had Deutsche Bank downgrade them. You also had Raymond James downgrade them, but they're holding up quite well. Not really seeming to see any downside off the downgrades.
They've stopped effectively hiking campaigns, and here we have the opposite out of the BOJ.
Yeah, I mean, I think what was happening in part was the rest of the world was getting too far away from them. It's a little confusing what they've done. They're kind of using the old numbers, the 50 basis point cap on the 10-year as a reference point now. I've heard of caps, I've heard of ceilings, I haven't heard of reference points. And what you see when you look at the 10-year Japanese benchmark is that it's up to 55. It had spiked a little higher, but they're not quite sure where to go. They sounds like they'll take up to 1%. And before...
Also seeing KPMG, so one of the big four, is offering high school interns $20 to $22 an hour to encourage more teenagers to consider a path in accounting and to help fix a talent pipeline problem.
Think about it. Now it seems like there's enough pressure that they need to do at least something about it. On the data today, guys, it was good, not good enough for the Fed to say it's an all clear. But I want to show you one chart, which is Fed Chair Powell's preferred inflation gauge. And there's three things I want to show you about this chart. The first one is that the number came down. It's 4.13%, so it's headed in the right direction.
Also seeing some news between India and the UK. They could potentially sign a trade deal this year.
The pace of inflation declines had been coming down, or had been sort of evening off. Now it seems like it accelerated.
Also, Alibaba's broken back above $100 again. That's ticker BIIB.
Housing. That's the one that's the one Powell has been most interested in watching here. So it came down to 4.13%. So the pace increased if you look at the chart. The other thing you want to look at is what happened in November and December on that chart. And what you'll see, I guess we don't have it. There we go. Thank you so much, guys. Is that November, December thing. You saw that decline they had, and everybody got all happy back then. And then you see what happened as it went the other way. That's another reason why I think Powell is going to be careful here and not necessarily react to 1 or 2, even 3 months of data. He wants to see it coming down and to keep coming down. And that's what's going to give him the confidence to say, hey, no more hikes, guys.
Although, I mean, Steve, when you look at that chart, it is a significant decline, more so than perhaps had been the case when it was going up. I don't know if that matters at all, I guess what the amplitude or whatever you call that.
Right. Right, but I wish, you know, I can't always control the y-axis in that chart, David.
Okay.
But if you were to make it so that the y-axis was at 0, you would see we're still double kind of where they want to be, and this is a big deal for Powell because his idea.
Also, just a note on that Alibaba. Then, as we've broken $100, we are actually coming close into 2 key levels. So we have our first deviation at 101, and right above that we have another level at 103. The thing I've noticed on Alibaba, they're not usually day trading levels. They don't tend to hold up super great intraday. They can be great from a swing perspective. And to zoom it out, I can show you, actually I don't have an example of the first deviation. Last time we had the second deviations, you can see here we did continue to move for about another 2 weeks. And again, this is why we play the long dated options. When I say long dated, I usually mean a month plus. You had that move and then instantly kind of just a massive hammering down. So Alibaba does seem to be a bit more of a delayed one, so I will probably look for an entry short on it, but I will probably give it a few days, let it potentially move that bit higher before jumping in short. And I think that's always a good thing on, especially when you're coming into a key level like $100, because if we break above it, that'll be that level we retest, and if we don't break it, obviously that'll be the bounce level. So we usually want to get that entry above so we can readjust, move our stops to break even once we come down to that 100 retest.
Business spending, they keep thinking that because interest rates are so high, businesses are going to cut back in their spending. But I think we might be seeing some of the government investment programs that are out there show up in the private sector spending. I think we might be seeing tech and other labor-saving things. You live in a world, David, you can talk to these companies all the time. They still can't find workers, so what are they doing? They're looking for robots. Robots that can, according to the New York Times today, pick up plastic dinosaurs. You see that story? They're using AI and the robots, David.
I like it. I'd like to see plastic robots picking up litter on the streets of New York City. That would be good too.
Oh, that's a good use for a robot.
Yes.
Good idea, David.
Thank you.
Excellent.
Thank you. Yeah. I'll let Jessica Tish know.
This morning on
robots.
Steve, thank you.
Again, BIIB, so Biogen, that's one buying out RETA Pharmacy for that $172.50 a share. Seeing it give back most of that sell-off, so maybe a bit of an ease in the fear.
A lot about how difficult the last mile is for the Fed. That doesn't sound like an environment where you want to be long the index in general.
No, I don't think so. Thanks so much for having us, by the way. You know, we've been saying now for several months that we have entered a renewed era of stock picking. And I think the problem with most investors, not only institutional, but high net worth investors, that they're trying to make a call on the S&P or the Qs or the diamonds. And we have to remember that the stock market is a market of stocks. And just look at the earnings season and how certain companies are doing better than other companies, how the big banks are doing better than the regionals, on how semiconductor companies are doing better than other semiconductor companies. I don't think you want to be in these more passive type of index level ETFs, let's just say. I think you want to own stocks in here. And I think that portends to an overall trend, Melissa, that I think many people are missing, is in the beginning of the year, everybody talked about this path toward normalization. I think what is going on is 2022 was your shock. 2023 was your awe, and as we kind of transition into more fundamental investing, we're going to kind of get back into normalized returns, and I think that's very, very positive for the markets longer term.
So you've been calling for this style of investing for the past several months, Brian. I mean, index investing was easy. I mean, it was the time to just go into ETF.
Ever pushing those highs up at 168.
So far year to date. So how do you sort of square that, you know, saying that stock picking was the way you should go for the past several months when it really was just investing in the index, investing in big ETFs? That was the way, that was the easy way to go.
Actually, no, I will kind of go against that a little bit. Okay. So let's think about this. Since the beginning of the year, Melissa, we've had 3 very distinct tech market trades, right? In January was the January effect. In March was the rotation out of financials into tech. And then really what we believe is the real true thematic fundamental move was more into the AI side of things. If you go back and look at what the market's done in January and February, actually value was outperforming and small cap was outperforming. It was really the March kerfuffle with financials that kind of really kick-started this whole notion of what everybody likes to talk about as the Magnificent Seven. But what the thing that people are missing right now is that over the last 30 days, growth at a reasonable price has outperformed the S&P 500 by almost 300 basis points. But more importantly, and I think interestingly to us in our work, is that dividend growth as a strategy has massively outperformed the last 30 years, and no one is talking about that. I think what the issue is that we're starting to see a broadening out of the market, and you take a look at stock performance, earnings growth, valuation, the disparity within those 3 measurements is very wide. That tells you you want to own a Lilly right now versus a Pfizer, or you want to own NVIDIA and AMD versus Intel. Intel just came out of a period where they were losing money. You want to buy companies that are earning money over the long term with proven track record in terms of not only their
Back coming to 101. Again, that's where our first deviational level is. Again, from my personal experience, I don't like trading the levels from a day trade perspective. Could be a potential swing if we hold above this level coming into a few days later.
keeps getting pushed out. So what we need to see to get to our 50-50 bull case scenario for the S&P 500 are earnings to reaccelerate. We're starting to see that. So
and there we go, we've cracked through.
Like our bull case, for the S&P 500 target that we have at 5,050 looks more and more realistic.
All right, 5,050. That's quite a difference from your base case scenario, I guess, which is 45 and change. Brian, it's always good to speak with you. Thank you.
Thanks so much.
Brian Belsky. As we head to break, here's our roadmap for the rest of the hour. No consumer slowdown for Procter & Gamble as shares rise their post-results. We'll break down the key takeaways next.
Plus, profits did fall at Chevron and Exxon. Both stocks are underperforming on the year, why some on the street say it may be time to buy.
And finally, a look at one industry seeing sales heat up amid record-breaking temperatures across the globe. A big show still ahead. Stay with us.
I'm sitting on it. Just a hot broke bitch, high heel, 6-inch in the back of the nightclub, sipping champagne. I don't trust any of these bitches I'm with in the back of the taxi, sniffing cocaine. Drunk calls, drunk texts, drunk tears, drunk sex. I was looking for a man who was on the same page. Back to the intro, back to the bar, to the Bentley, to the hotel, to my old way. 'Cause I don't wanna feel how I did last night. I don't wanna feel how I did last night. Anything, please, have mercy on me. Take this pain away. You're killing my symptoms, doctor. I don't wanna feel. Broke this joint, how I'm blowing this steam. Back to my ways like 2019. 24 hours since my ex did dead. I got to move, man. I mean, so I'll take this one. Last night really was the cherry on the cake. Been some dark days lately, and I'm finding it crippling. Excuse my state, I'm as high chances. And if I take a step back to see the glass half full, at least it's the part of two-piece that I'm tripping in. And I'm already acting like a dick, know me, so you might as well stick it in. Just a heartbroken bitch, high heels, 6 inch in the back of the nightclub, sipping champagne. I don't trust any of these bitches I'm with in the back of the taxi, sniffing cocaine. Drunk calls, drunk texts, drunk tears, drunk sex. I was looking for a man who was on the same page. Back to the intro, back to the bar, to the Bentley, to the hotel, to my own way. I don't wanna feel how I did last night. I don't wanna feel how I did last night. Anything, please. Have mercy on me and take this pain away. Just give me my symptoms, doctor. I don't wanna feel. I don't wanna feel like I felt last night. I don't wanna feel like I felt last night.
Break things down. RBC Capital Markets analyst Nick Modi, he's got a hold rating and a $165 price target on the name. What are your takeaways, Nick, from the management commentary about the significant cost headwinds that they're facing, the slowdown in volumes that they're seeing, and the consumer?
Yeah, I mean, look, P&G has faced a pretty challenging last few years, but they've managed to do reasonably well, at least relative to their peer group. You know, cost headwinds are moderating. I mean, they're actually expecting commodity cost to be a tailwind next year, though currency will be slightly an offset. As it relates to the consumer, look, whether we go into a recession or not, I don't really think it matters. The reality is consumers are changing the way they're behaving. We're seeing consumers trading down in certain categories. We're seeing them buy smaller pack sizes. We're seeing them shop at Dollar Channel and, you know, share gains at Walmart, which, you know, obviously consumers that are under pressure tend to look at Walmart to save money and have more value. So all of that is going on. But I would have to say, look, even though we have a hold on this company, I think P&G is showing that it is a best-in-class operator in this industry, and that's as a result of 10 years of very heavy lifting that the company has done.
Your assumption is that P&G will sort of settle out in terms of market share, and that's sort of your assumption in terms of all the growth forecasts that you have. And I'm wondering, Nick, if there's a risk in your mind. I mean, if consumers are trading down and trying other brands, if you lose some of those consumers, or if it is always that when the consumer has that money, they will go back to the premium brands.
It really depends, Melissa. So the one thing P&G did that was very smart is they started value messaging about a year and some change ago. What does that mean? You know, they were basically showing, hey, it takes one Bounty versus 10 papers of private label as an example, right? So in the minds of the consumer, they're starting to then say, oh, wait, I'm okay paying extra money because I'm actually going to have to use less when I have to wipe my table, right? And so they were very smart about getting that value messaging out. And I think that's one of the reasons why they're still gaining share at a time where private label's actually gaining across many categories.
Nick, you know, we also heard from Colgate. I'm just curious. Stock's down about 3.5%. I think you cover it as well. I think you're neutral on it. But just give me a take. I mean, this hasn't done much of anything for the last at least 3 years.
Yeah, look, I like the changes that they're making, but the reality is North America is under pressure. They made a big bet on whitening for this year, you know, and that's a premium, more discretionary type product. So that's probably putting some pressure on their business. And the reality is, look, investor expectations were high coming into the print. You know, numbers were already at the high end of guidance. Now, Colgate actually raised their guidance today, but they effectively went to where the street was already. So part of this is really about just expectations were high going into the earnings call.
Nick, one last question in terms of Procter & Gamble. I know you think it's, you know, it deserves a premium because of the execution, but it's trading, you know, at 24. It's below the 5-year average in terms of forward PEs, but still, I mean, if you take a look more broadly across the market, it's trading at the same multiple as a Meta. And I'm just curious, you know, how do you sort of walk through this valuation to your investors?
Yeah, for us, it's really about the consistency. If you go back and look at what really drives a consumer staples valuation, it's not really the magnitude of the growth. It is actually the consistency of the growth, right? Because if you think about it, why would a chief investment officer of any large fund buy a consumer staples company. It's really because it's their insurance policy in their portfolio, right? If they want growth, they can go to Meta or any other stock that you were mentioning. The reality is P&G has been very, very consistent, and that is partly why the multiple is where it is. So if you think about like long-term cash flow valuations, the duration and durability of what they're doing, I think, is much longer than some of its peers, and maybe even some tech companies, right, where you have obsolescence risk and a lot of volatility based on product cycles. So that's the beauty of consumer staples, right, is that if you can find the right stocks that can deliver consistent results, that will then warrant a premium valuation.
Nick, great to speak with you. Thank you. Nick Modi.
Yep, thank you. Have a great weekend.
As we head to break, check out the biggest gainers on the S&P 500 this morning, topped by T. Rowe Price, up 11%. And we've got much more on Intel, which is surging on the back of its results right after this break. Stay with us.
Just a note, we are seeing the fear and greed index for crypto. It's 52 out of 100, so up 1 from yesterday. Fear and greed index 79 out of 100 for the stocks. Again, this is down, I think, about 3 from yesterday.
Take your time, but you face it. Let me know, I've been driving all night. I'll be home when you're feeling right. You're not alone when I'm by your side. Take me home, baby, one last time. I'll be home when you're feeling right. Driving all night. I'll be home when you're feeling right. You're not alone when I'm by your side. Take me home, baby, one last time. I'll be home when you're feeling right.
Welcome back to Squawk in the Street. Ford shares are under pressure while shares of Intel are up. This after results from both companies. Phil LeBeau and Christina Partsinevelos are with us. They're going to break down the numbers. Let's start with Phil and Ford. What stood out to you here, Phil?
The EVs, the spending, it's going to be greater than expected. The ramp up is going to be slower than expected. Just look at the numbers, David. In March, their guidance for full year EV costs was $3 billion. What's
also Biogen, ticker BIIB, the one buying out RETA, is now pushing green and broken above its anchored VWAP.
They got for that? They certainly haven't picked up market share. In fact, they are number 5 when it comes to EV market share in the U.S. for the first half of this year with just 4.6% share. Their sales in the first half up just under 12%. The market overall for EVs, it was up basically 50%. And as a result of this, as a result of Ford realizing it's not getting the demand, it has to cut prices on the F-150 Lightning. Last night during the conference call, CEO Jim Farley said, you know what? we're going to shift gears and we're going to move more towards hybrids. Here's what he had to say.
Hybrid systems from us, but don't think of them in the traditional sense of an Escape hybrid or Prius. They're probably going to come to life differently than most people think. And customers like that.
The hybrid move is one that is going to get mixed reaction. There will be people who say, do not abandon.
Okay, guys, I think I'm going to end the stream here. I mean, Fridays are always pretty boring, at least from the stream perspective. No one really tunes in, so no point really streaming all day. Not really looking at too many opportunities today. I mean, SPY, if it comes back to the anchored VWAP, could be a nice bounce, which it is really starting to do a strong pullback right now. So good look at that. And then on the Roku move, if it can move up to 85.35, we'll look short bias, probably from a swing perspective. But that is it. Hope to see you Monday, and that's it. Peace.